Welcome back to Candlestick Signals for today's market. September 10th, 2025. We're diving deep into the candlestick signals that are shaping our markets. Buckle up, because what I'm about to reveal could change the way you view your investments. From tech titans to energy giants, we're covering it all to decode the market's hidden messages. Let's get started. Our first sector under the microscope is technology, which has been the talk of the town with an impressive rally last week. The sector surged by a staggering 9.2%, translating to a market capitalization increase of $68 billion. Software and IT services were the standout performers, each posting gains of around 9.5%. Hardware and storage weren't far behind, with a weekly return of approximately 8.7%. The daily chart for the technology sector formed a powerful bullish continuation candlestick pattern, signaling that the current uptrend is likely to persist. This formation suggests that buyers are firmly in control and are pushing prices to new heights. The sector's momentum has been robust for some time now, and there's a strong possibility that we'll see this positive trend continue, potentially reaching new record highs in the near future. Shifting our focus to the communications sector, we observed a notable undervaluation coupled with intriguing candlestick formations. The sector experienced a 4.5% uptick, equating to a market cap change of $32 billion. A cluster of Doji candlesticks appeared throughout the week, indicating market indecision. But these were interspersed with bullish signals, particularly in key stocks like Alphabet. The daily chart for Alphabet showcased a bullish engulfing pattern on Friday, suggesting a potential upward reversal. This pattern, combined with the sector's undervalued status, presents an interesting opportunity for investors looking for growth potential. The real estate sector caught our attention with its undervalued position and encouraging technical signals. The sector posted a 3.8% gain, with a market capitalization increase of $24 billion. What's particularly interesting is the prevalence of bullish Harami and hammer patterns across the sector. These formations, especially when occurring in an undervalued market, often precede significant upward movements. The daily chart for the sector index displayed a textbook bullish Harami on Thursday, followed by a strong white candle on Friday, reinforcing the bullish sentiment. Now let's turn our attention to the energy sector, which presents a more cautionary tale. Despite fair valuations, the sector was plagued by bearish candlestick formations. Energy stocks experienced a modest 1.2% decline, equating to a market cap reduction of $18 billion. The daily charts for major oil companies and oil services firms were dominated by bearish engulfing patterns and hanging man formations. These bearish signals were particularly pronounced in the afternoon trading sessions, with many stocks hitting their daily lows around 2:30 p.m. Eastern Time. This combination of technical indicators suggests that investors should approach the energy sector with caution in the short term. The healthcare sector painted a mixed picture, reflecting the diverse nature of its components. Overall, the sector saw a 2.5% increase, translating to a market capitalization gain of $30 billion. However, the candlestick patterns varied widely across different healthcare industries. Medical device companies in particular showed strength, with several key players forming bullish Harami patterns on their daily charts. These formations, occurring in what is generally considered a value sector, could indicate potential buying opportunities for discerning investors. Last but not least, we come to the utilities sector, which is flashing some warning signs. The sector experienced a 2.1% decline, resulting in a market cap decrease of $15 billion. The daily charts for utility stocks were rife with bearish signals, most notably hanging man and bearish Harami patterns. These formations, combined with the sector's current overvaluation, suggest that utilities may face some headwinds in the coming days or weeks. The bearish sentiment was particularly evident in the morning trading sessions, with many utility stocks reaching their daily highs shortly after the market open, only to trend downward throughout the day. Now, let's zoom out and look at the broader market picture. Across all sectors, we observed a high count of Doji and Near Doji candlesticks, to 486 to be exact. This widespread occurrence of Doji patterns indicates a significant level of indecision in the market. Traders and investors appear to be positioning themselves ahead of anticipated macroeconomic catalysts, such as upcoming Federal Reserve decisions and key economic reports. The most prevalent bearish signal was the hanging man formation, the staggering 846 instances observed, heavily concentrated in the utilities and energy sectors. This high count of hanging man patterns in these specific sectors reinforces the bearish outlook we discussed earlier for utilities and energy stocks. On the bullish side, we counted 88 bullish engulfing patterns, primarily in technology and small-cap stocks. While this number might seem small compared to the bearish signals, it's important to note that these bullish patterns are occurring in sectors that are currently undervalued or fairly valued, which could amplify their significance. Another interesting observation is the presence of 265 bullish Harami patterns, predominantly in the real estate and healthcare sectors. This concentration of bullish Harami formations in these value-oriented sectors could be a sign of potential trend reversals or continuations of recent positive momentum. It's worth noting that the standard daily candlestick duration is used in this analysis, which research has shown to be optimal for capturing actionable market reversals and momentum over a 1 to 10 day outlook. This time frame is particularly useful for short-term swing traders and position traders looking to capitalize on emerging trends. As we wrap up our analysis, it's clear that September 10th, 2025 presents a market landscape with distinct sectoral divergences. We're seeing a bearish tilt in large-cap utilities and energy stocks, as evidenced by the high count of hanging man and bearish engulfing patterns. At the same time, there's pervasive indecision across the broader market, reflected in the high number of doji candlesticks. However, it's not all doom and gloom. Bullish reversal patterns are emerging in undervalued technology, communications, and real estate shares. This suggests that despite the overall market indecision, there are pockets of opportunity for astute investors. In conclusion, the candlestick signals for today's market paint a picture of a market at a crossroads. Technology and small-cap stocks remain favored for upside potential, based on both valuation metrics and technical structure. However, caution is warranted in the overextended energy and utilities sectors. As always, it's crucial to combine these technical signals with fundamental analysis and broader market context when making investment decisions. The market is dynamic, and while these candlestick patterns provide valuable insights, they should be part of a comprehensive investment strategy. That's all for today's candlestick signal analysis. Remember, in the world of investing, knowledge is power, and staying informed is key to success. Thank you so much for watching. I hoped this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment. Smash that like button. Subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.